Hey, if you're just starting out and want to finally understand how to actually trade with the trend, not guessing, not blowing up your account on emotions, this video is for you. Today I'm going to show you, step by step, how to spot a strong trend, where the best entry points are, and how to avoid getting caught in a reversal. No fluff, all business. Let's go. Step 1. Identify the trend. Before you can trade with the trend, you need to know what it is. A trend is when the price is moving in one direction, consistently, not randomly. If each new high is higher than the last, and the lows are also rising, it's an uptrend. If highs and lows are getting lower, that's a downtrend. To see it clearly, zoom out a bit. Use a 5 or 15-minute time frame. Watch closely. If price is moving steadily in one direction, retracements are small and most candles are green or red. That's a clean trend. But if price is just bouncing up and down with no clear direction, that's a flat, and trend strategies won't work there. So first, confirm the trend. Then move to the next step. Step 2. Wait for the pullback. Here's where a lot of beginners mess up. They spot a trend and jump into it immediately. Most common mistake. After a strong move, price usually pulls back a little. Your job is to wait for that. This way you can catch a better entry. Ideally, it should pull back to the trend line, support and resistance zones, or a previous reaction level. When that happens, the chart often slows down. The candles shorten, smaller bodies, long wicks, or a little consolidation. Those are signs that the pullback is ending and price is getting ready to move again. Step 3. Look for confirmations. Before you enter, you need confirmation. First, check the candles. If strong candles appear in the direction of the trend after the pullback, that's a great sign. It shows the market is active again, price is ready to move. Second, look for patterns. The simplest examples are flags or triangles. In those, price compresses inside the pattern and then breaks out with a strong move. Watch for a breakout with a volatility shift. When smaller candles turn into bigger ones, chances will be higher. That's a confirmation. You saw the impulse, then the pullback, then price reacting at a level, and now a strong candle in the trend direction. That's your green light. I want to start making money online, but I don't know where to start. What if I lose my money? I hear this all the time. Look, trading isn't some magic button to get rich overnight. But if you want to try it the right way, without wasting money or months figuring things out, here's how. I trade on Quotex, and right now, you can copy my trades for free while learning in real time. No upfront fees. I'll get a commission from the platform instead. That means you can test everything on a demo, see how it works, and decide for yourself without spending $1. It takes minutes. You get the currency pair announcement. Open it on the platform. Then you get the signal. Place the trade. And that's it. Will this make you a millionaire tomorrow? Of course no. But it will get you started, you'll see how it works, and see your first profit without risk. This is the easiest way to step into trading. Just check it out and see if it's for you. Click the link, get set up, and let's go. Step 4. Pick the right expiration. If you're on a 1-minute chart and just saw a breakout, go for a 10 to 15-minute expiration to give the price room to move. Always consider support and resistance levels where price might stall or reverse. If you're late to the move, don't chase. Just wait for the next clean setup. Also, one more tip. Don't trade during news events. Check the economic calendar on investing.com. Even the best setup can get destroyed by random spikes. Let me show you everything in action. We've got a strong uptrend. Price is moving steadily along the trend line and stalls at a resistance level, forming a triangle pattern. Price compresses inside the triangle. Smaller candles, tighter range. It's building energy before the breakout. Exactly what I was talking about in the very beginning. I watch volatility. It drops right at the level. Candles get shorter. I'm expecting a breakout any second. Then it happens. A big green candle breaks resistance, and I enter a 15-minute trade up. Why 15 minutes? because if it's a real breakout, price will need time to move, and I don't want to get stopped by a quick pullback. I also check MACD. MACD and signal lines are both above zero. Histogram is rising, lines are diverging. That's a strong uptrend confirmation. So I've got the trend, a pullback, a clean breakout, and indicator support. Trade as expected, closes solidly in profit. Trade example number 2. Second setup, again, a strong uptrend. Price pulls back from the trend line, and I spot one more pattern, a wedge. This is another continuation setup. Price compresses between two trend lines, candles shorten, and the market kind of pauses before the next move. I watch as price touches the trend line, and though volatility is low, there's no chaos. That's what I want. As soon as price bounces off the trend line, I go in 15 minutes up. I'm sure that if the trend is strong and the pattern breaks, there should be enough momentum to carry the trade. So that's the whole strategy. Spot the trend, wait for a pullback, look for confirmations. Only after all of these, enter, calmly and with a plan. Then just stick to this, stay disciplined, and don't hurry. If you want more real examples like these, check out my Telegram. I post my trades daily with full setups and breakdowns. Links in the description. If this video helped, hit that like button and subscribe so you don't miss the next one. Good luck out there, and as always, stay safe and be in touch.